EM bonds can diversify a US-centric bond portfolio and provide higher yields. We believe developed market bond yields right now are not adequately compensating investors for growing long-term risk, making EM particularly attractive right now because of the better fundamentals and higher yields. Many equate EM with high risk, and for sure, investing in EM does introduce unique risks into a portfolio. However, this perception overlooks that across EMs over the past few decades, responsible policies and reforms have been implemented, and a large and liquid debt market has evolved. At the same time, developed market risks have increased, and we now see high debt and increased policy and political ineffectiveness. Emerging markets, on the other hand, have low debt and controlled inflation and stand to benefit from many of the geopolitical shifts that we see today. VanEck offers a suite of EM bond ETFs, allowing investors to capture opportunities within the asset class, including higher yield potential. The VanEck Emerging Markets Bond ETF, or EMBX, invests across the entire universe of EM debt, sovereign and corporate bonds in both hard and local currencies. It's managed by an experienced team with a proven track record that goes back to 2012, and they apply a consistent and disciplined approach across the entire investment universe to find the best opportunities. VanEck also provides solutions for investors who are looking for more targeted opportunities within the asset class. The VanEck JP Morgan EM Local Currency Bond ETF, EMLC, focuses on sovereign bonds issued in local currencies. With continued deficits and sticky inflation in developed markets, we think EM local currency can continue to outperform. This is due to both better fundamentals and higher yields. The asset class has provided a 335 basis point yield pickup versus 10-year US Treasuries and a 435 basis point pickup versus broad developed market sovereign bonds on average over the past decade. And the asset class provides the potential to benefit from currency appreciation. EMFX can add or detract to returns in a given year, but local rates have actually been the main driver of positive returns. So EM local currency bonds are not just a play on currency, they're also a yield enhancer within a global bond portfolio. Lastly, the VanEck High Yield Emerging Markets Bond ETF, or HYEM, focuses on dollar-denominated high-yield emerging market corporate bonds. The EM corporate bond market has broadened and deepened over the last few decades, and we believe the asset class offers a compelling complement or alternative to US high yield. EM high-yield corporate bonds have provided a pickup of 130 basis points in yield over US high-yield corporates over the past decade, with a greater tilt towards higher-rated bonds. This has allowed investors to earn more yield with less credit risk. And given the tight spreads we now see in US credit, we believe high-yield emerging market corporates may be an attractive area for yield-focused investors to take a look at.